a trade. You can see that we got this big block volume at the very top edge. What actually happened was the price dropped down off that block volume, so I started to sell on limits, and we got filled on the way up through this process at 3s, 4s and 5s, and you can see the price dropped away from that transition. $100, guys. $100 on a 5 lot. 500 bucks. 500 bucks almost instantaneously just by trading a transition trade. Just by trading a simple little transition. Stops at break even, trading like Charlie D, giving you all the quality, giving you all the information that you need to do a bit of business and getting the business done. It's not because there's a buyer there, it's because the buyer gets jammed. That's the transition. And if it results in a small profit for me, I'll get the trade off and I'll make some monies. If it doesn't, well, we might be able to swing this for $5,000. Some really nice money on a transitional trade basis, right? It's that easy. You know, you could trade like this way constantly, recognizing transitional trades, recognizing buyers at higher prices getting jammed, sellers at lower prices getting jammed, and just doing business against those elements. And when you see how consistent you can get just by doing some business like that, you know, things can become very, very interesting as traders. Transitional trading is just what we teach in this classroom. Everything we do is a transition. We're always asking for leans of some description in your order flow. You're using block volumes. These are all transitions. Why was there big volume? It must be a transition, right? Here's gold in the last few hours. Look at the transitions that took place on gold. Does anybody see them? They should be pretty crystal clear, guys. Does everybody see these transitions? Take a look at the bottom edge here. Sellers didn't get jammed, sellers didn't get jammed, sellers did get jammed. There's transition number 1. Nothing up here. Sellers, big sellers, getting jammed. There's transition number 2 right there. Buyers, jammed. There's your first sell. Buyers, jammed. Second sell. Buyers, jammed. Third sell. Third sell, big sell-off. Very, very big profits. Beautiful, right? Buyers, sellers jammed. Buy trade, reasonable profit, scratch. Buyers, sellers jammed. Buyers, reasonable profit, scratched. Jammed again here, reasonable profits, scratched. Some trade here, perhaps this was a losing trade that you took, so the price went up, rejected, came back down, scratched out. Sellers, possible scratch again there. Sellers, big sell level, still in that trade, right, off the 92s. Sellers, off the 92s, those buyers getting jammed up at the 92.5s, they can't move, they're stuck at that price, and you got a very easy sell away from those guys at 92s down to 91s. Another 100 bucks. It's just a lean, isn't it? It's just a lean that you can use to try and find a bit of business. Well, that's a transition. It's when a transition. Look, a transition is when it goes from short business to a buy, short business to a buy business to a short business to a buy, short business to a buy. Transitioning from that short business to buys and from that buy business to shorts. That's what Charlie's talking about when he talks about the transitional business. Be a transition trader is what he said, I think. Maybe a wrong quote, but I'm pretty sure it was somewhere along those lines. And if you listen back to the recording, you'll find that word transition being mentioned, as I said, a good dozen times or so over the course of the whole video recording.